Only money.
Place your bets, ladies and gentlemen.
Well, with the Federal Reserve poised to start raising interest rates, the days of cheap money may be going away for a while, and that means that you'll need to be even smarter when it comes to the finance charges that you pay. And we talk about it tonight on an all-new Money Talks. If you have good credit, you will easily qualify for zero-interest long-term loans with pretty small monthly payments for items like furniture or televisions. But should you do it? We asked a professional. Here's certified financial planner Neil Vanoy.
Studies show that people tend to spend more when they buy on credit than when they use cash, so be careful. Don't be enticed by a zero interest rate offer or a low interest rate offer and end up spending more because it's on credit. You want to focus on that total amount that you're spending rather than just that interest that you're not going to be paying.
Remember, even if interest-free, if you are spending your hard-earned money, that's money in your budget that you can't save or invest.
Don't just focus on the monthly payment. Make sure that what you're buying on a special financing offer is something you can actually afford, because you're going to lose all of those benefits of the special financing offer if you miss a payment or you miss that payoff deadline, and then you end up with a bunch of accrued interest that really blows your budget.
And if you don't get your new sofa paid off on time, you just may suddenly owe all of that back interest.
You want to be careful when using special financing to buy things that don't appreciate, like appliances or furniture. If you stretch out those payments for several years, you could be paying a lot of money, even without the interest, just paying a lot of money for something that's worth a lot less down the line.
So I had to ask Neil, when it comes to low interest rates as a financial advisor, is there anything that he likes for an extended purchase?
Low down payments with a low fixed interest rates for something like a house, I think, is a great option, because a house is something that can appreciate in value over time, and locking in those fixed payments is great, especially when there's high inflation now, because those payments get to be lower and lower amount in real terms over time because of that inflation. Personally, if I were buying a home right now, I would lock in as low of a rate as I could for 30 years and just pay the minimum and look for ways to save my money, invest my money elsewhere. But just make sure, if you do that, make sure you're buying a house that you can afford. Don't get in over your head just because you get a good interest rate.
Now, as far as getting sales or deals on furniture, according to NerdWallet, you'll want to shop towards the end of winter, that being January and February, like now, or the end of summer, August and September, to find those best deals, or so they say.